Good afternoon, guys. Today I want to go over a reversal pattern, and I want to make this video very small. For this, we're going to use the 5-minute and the 1-minute time frame. One thing that you notice here, we have dollar area 1749 ramp up on GPS, starts to get a little bit of resistance and rejection of 1793. Got a high 93 and 93 with this red candle right in this spot. I'm gonna bring it over so you can see a little closer. We have 1, 2, and 3 candles. If you go back to the 5-minute time frame, you're gonna notice right here we have this rejection pretty close to that same spot, 1793, 93, 93, right here, 3 candles testing the same area, coming right back down. So you notice right here got some consolidation as it comes down during the 5-minute time frame. Candles got a rejection of the area. You see it coming down, finding support. The prior low 1775, 1775, 75, 75, 75. So you can basically make a trend line if you mind. I don't have no trend lines right here, but with your mental trend lines, you can put it right there, and you can see how it starts to give you some sort of channel in this pocket. As it starts to come up, you're gonna notice that you have a couple of different areas here, and what we're gonna use here for this reversal is the top of the pattern, just around the high. This candle's right here, 1793, pretty close to the whole dollar area. As it starts to reject and find support, you notice how it starts to consolidate inside of this pocket, giving us higher lows all the time, creating this wedge pattern on the 1 and the 5. Okay, so as it starts to come up, you're gonna see this pattern reject the same areas here the same way. 1788, got 88, 88, 88, 88. So many areas around the $88, 88 cents, pardon me, 88. And on the 5-minute time frame, again, we go back to the 88. We can see it right here, 1788, one time. It's 86, 88, so 1, pretty close by 2 cents. We got 88, 88, 88. And as you notice right here, we have a shooting star formation on the 5-minute time frame that gives us that little bit of a dip just to test the area again for the higher lows being printed. Coming up towards the high of the pattern, one of the things that I like to do when I see these patterns is wait for the formation to come back and retest this thing, and in anticipation to the rejection of the prior area. Again, we got a 1793. You can see it, 1793 right here, wedge pattern. And so when you see this, so very unfortunate we didn't have a bigger dip or bigger flush on this one. It's about 20 cents, 17, 18 cents, whatever, depending on the amount of shares that you're holding. Pretty much is what you're going to be able to extract over this long, short-term trades. But sometimes when you see these patterns form in your eyes, the flush or the washout gets to be a little bit bigger than just 17, 18 cents. Sometimes you get $1. Sometimes you get 50 cents. But again, it depends on your risk tolerance and how much you really want to hold and how many shares you want to go into a position. On this particular one, we just had, let's say, take the low of this candle going up to the high 93. We had a 17-cent drop by 1%, more or less. drop here on the move of this thing. According, obviously, I don't know if I'm not sure if it's a 1% drop here really, but according to this, it says plus 0.99%, really 0.99%, so pretty close to the 1% drop. And again, what you have to do with this thing is take the reversal close to the lower point or the higher point. If you're going long or if you're going short, here's the highest point, and if it doesn't hold, as probably if you would have done it here, for example, taking short on the 88 cent area, you'll notice that they have come down, but just to retest this trend line, making higher lows, just to come up to the high point of the pattern. Again, you take the reversal at the highest point, or if it was a long trade, at the lowest point. If it doesn't hold there and it gives you a quick dip, now you know the pattern is not fully developed and it didn't work, and you can get out. For example, again, using the high here of 88 cents, you notice right here that when it came to 93 cents, right? So if you take the short here, expecting this to reject and not come up, because it rejected a couple of times, 1, 2, 3, 4 candles coming down, but as it comes up, you see that the pattern was not fully developed. So same thing here. If you take the short here and it doesn't work, then you can get out, minimizing your risk because you have taken the highest point. If it was a different pattern, a wedge pattern, but not going an ascending wedge, but a descending wedge, what you have to do is take the long trade close to the lowest point for that support area going higher. Again, this is a pattern that I like to take, and as you can see this thing approach the areas of the highest points of the pattern, you can anticipate the move, and you can use it for your advantage. So again, just wanted to bring you this over today. Thank you so much for letting me bring it over, and happy trading. Take care, guys.